Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand what we see in the global landscape. Well, this morning we had GDP numbers that were revised up again in the third quarter, up to 3.6% GDP growth. This is actually a fabulous number. We're seeing initial claims on unemployment, and the official numbers come out tomorrow, but the unemployment claim numbers that came out on the ADP report came out this morning, and they were also more positive. What this tells you is simple. The economy in the U.S. is getting better. While we've seen the last, say, 3 or 4 days of the stock market tread slowly lower, a couple percentage points, not a lot, remember, nothing goes straight up and nothing goes straight down. So you need to do a little backfilling on the market because we've had a pretty fabulous year. I would anticipate we'll start stabilizing, and hopefully we will resume our uptrend in the U.S. equity and in some of the emerging market economies as we get into year end. But at the end of the day, the economy is getting better, not only here in the U.S. but also abroad. These numbers tell you one simple thing. Interest rates are slowly going to move up. I have repeatedly warned on these updates about long-term and intermediate-term bonds. Anything really more than 3 years at this point is really unsafe in a portfolio. At Resney Wealth Management, our clients are all in floating rate security type bonds, which are the ultimate short-term, which protect against principal erosion in a rising interest rate environment. While we can still capture a good return, we don't lose principal as rates slowly move up. So at Resney Wealth Management, we are on the right side of the fence when it comes to the fixed income portion. On the equity-based portion, which has been relatively strong, we continue to dominate the small and mid-cap arena in the U.S., which has been the relatively stronger areas this year, then followed up by some of the emerging market. As we went into month end, and as our ranking system dictated, emerging markets were still in the top 5 categories, so we continue to hang on to those. I would anticipate, again, relative strength coming back around as we get through the month of December. The U.S. economy, the world economy, and the emerging markets are showing improvement. What this tells us again is that interest rates will slowly start moving up. Not fast like Jimmy Carter days, but this improvement tells you the economy is gaining steam, and this ultimately means the government can start curtailing or reducing their quantitative easing bond buying purchases that they've been doing for the better part of the last 3 or 4 years. This is a positive for the investor who's on the right side of the fence, meaning at this point in time, investors need to realize owning a lot of bond mutual funds is completely wrong, and it has been all year. I've repeatedly warned non-clients of Resney Wealth Management to reduce your bond exposure and no more than a 3-year average maturity. Floating rate securities at this point in time, in my opinion, are the only place to be, and those are, again, the types of fixed income securities we own in portfolios at Resney Wealth Management. We continue to like the global landscape. If I look, generally speaking, at valuations, the U.S. market actually is probably the most expensive of all developed and undeveloped markets around the world. But the money is floating or gravitating towards the strongest house, which is really the U.S. marketplace overall. I slowly believe that we're going to continue to see more emphasis as we get into year end and next year in the emerging market arena. These areas are about half of the valuation of the U.S. So we could see a real surge, hopefully, as we get into 2014 in the emerging market economies. Of course, we're going to let our relative strength and our global tactical opportunity strategy dictate that. One of the things we're looking at is recession area indicators. We're seeing none of that. In fact, if we look at all of our indicators across the board for recession, which would mean time to reduce equity exposure, there is nothing in the landscape at all, meaning there's no recession. The economy, again, is getting better. Running a strict strategy not only to grow the portfolio and to get income, but also reduce risk, and risk management when things are bad is an important part of how we manage money. So at Resney Wealth Management, not only are we going to help increase return for our clients, but more importantly, we want to have those risk controls in place if we need to reduce risk in the portfolio and raise ample cash or alternative investment assets that are counteractive to an equity market going down. As an example, inverse ETFs. There's inverse ETFs on many or all of the major asset classes, not only in the U.S. but around the world. We have access to those in addition. Currently, though, we are long, generally speaking, equity small and mid cap. We are long the emerging market exposure, which we continue to hold, and we are long short-term floating rate income investments within our client portfolios, because again, that's the strongest house, and we want to be in the areas that are relatively stronger. If you're a client of Resny Wealth Management, please give our office a call if you have any questions. Also, if you're a client of Resny Wealth Management, one of our assistants at Resny Wealth Management will be calling all of our clients over the next few weeks to make sure that we schedule year-end reviews with you in January. So expect a call. If you want to call our office by yourself, you can call. We're scheduling right now January 2014 reviews, so we can start sitting down with clients, talk about this year, talk about next year, and making sure you're up to date with whatever we need to do. If you're not a client of Resny Wealth Management, I urge you to give our office a call. Start 2014 off correctly. Schedule an appointment with our offices. We would love to sit down with you and help build your portfolio in the direction it's meant to go. Have yourself a safe and profitable week. Make sure you listen to our live radio show this Sunday. And of course, we will have a live TV show again next Wednesday. Have a safe and profitable week.